evening, everybody. I can say good evening. If you're anything like our Pittsburgh weather, it's a nice rainy evening tonight. So I just put Dave's bio in so you could read it, so we wouldn't slow things down. But Dave is definitely a professional trader and has excellent strategies, especially tonight he's going to work on how to catch the big trades during the volatile market. So with that, Dave, welcome again to the Candlestick Forum. We're anxious to see your information tonight.
All right, Steve, thank you very much. And I really appreciate the chance to see everybody tonight. Let's go ahead and make sure. Okay, if you guys could give me a Y just to double check, you can see my screen. I think everything is up and going. Thank you. All right, so welcome everybody, and again, thank you to the Candlestick Trading Forum for hosting me tonight. My name is Dave Aquino. I'm with Basecamp Trading. I've been doing this a while. I've had multiple opportunities to speak with Steve's traders, and you guys are always very knowledgeable and have great questions. So I'm just happy to be able to share this with you tonight. The name of the webinar is Big Fish Trading in Volatile Markets, how to catch big moves with relatively little risk. Now, this is a perfect topic for, I would just say, if you just look at the markets in the past 2 months, we've had significant moves both to the downside and to the upside, and great opportunities to take advantage of them. So I'm going to go ahead and jump right in. Again, a little bit of information about me. I've been doing this for over 23 years. I was just speaking with Steve before we started, and I started out with Merrill Lynch when I was 23 out in western Pennsylvania. And I was with Merrill Lynch for about 4.5 years. And then my wife got a job on the other side of the state, so I moved outside of Philadelphia, where I joined the Vanguard Group. And I was there for a number of years, and 12 of those years I was with Vanguard Asset Management Service, and eventually promoted into the Ultra Client Group. This is where we manage about $660 million of client assets, household assets, and my job was the senior options manager. So basically, you know, people that have a whole lot of generational wealth, sometimes they will bring with them highly appreciated stock, like General Electric, some Microsoft, Salesforce was one. It was within the family they were gifted because he knew one of the founders. And the neat thing about this is that these people wouldn't want to sell their stock. So we would create option strategies that would provide them a regular cash flow. So I've been doing this a long time, working with options, but with an eye towards equities. I've been with Basecamp Trading about 6.5 years now, and I run the Stocks and Options Live Trading Room. A little bit more about me. I have 2 kids. They just graduated from high school, both on their way. They're twins, so they're both on their way to college in the fall. So trading has been very good to me, as the markets have been. Allows me to have a nice living with my family. So let's just talk about you then. If you are currently trading or actively trading in the markets, I want to kind of get a feel for the people in my in the room tonight. Please type in yes or Y when I describe you. All right. So, are you currently making money consistently and, relatively speaking, as much as you want or need? Okay, and I'm talking about on a regular basis. Second, are you breaking even? This means that you're trading well, you know what you're doing, but you win some, you lose some, and you're just breaking even. You feel like you're right there. You're almost to the point where, if I could just remove some of the mistakes, I could really be making some consistent money. And then third, are you losing money? Now, don't feel bad if you're still struggling with trading. That's very, very common. Losing money, what I mean by that is inconsistent trading practices. Maybe you're going from one type of trade to another type of trade. Unfortunately, maybe you lose more often than you win, and maybe you have a bad habit of holding and hoping. That's when you get into a position, you start to take on a loss, and you hope it turns around. And sometimes it does, but the majority of the time it doesn't, and you end up with a bigger loss than you want. Yeah. All right. It's okay. It's a progression. Most of the time, the majority of the people either don't answer or are losing money, and that's okay. Trading even, sometimes it's frustrating. Sometimes you feel like you're almost there. Okay? So I'll be honest with you. It didn't start out easy for me either. Okay? I had a very hard time going from a mindset of an investor and a financial planner to a full-time trader. It's different. Okay? It's a different mindset. I had to develop a deep understanding of reading the charts, understanding price action, and understanding support and resistance levels. And I had to stop losing money. So the goal was to become consistently profitable. Okay? The way to do that is to have several strategies that can provide steady, consistent trading and reliable profits. The one thing with the markets is that the markets are completely wide open. You can do any type of trades you want. The question is, and that's probably the problem some beginning traders have. They have too many choices. What you should do is focus on just a couple of strategies. Think of it almost as a toolkit that you can bring out. Opportunity presents itself, but be very selective. Okay? We here at Basecamp Trading, we kind of embody this particular mantra. If you give a man a fish, you can feed him for a day. If you can teach a man how to fish, you can feed him, his family, and everybody after him or her forever. Okay? Most of the world is a sustenance type survival. A lot of the world's population fishes for a living. This is a reasonable catch for a fisherman to sustain his family. So not only can they have enough to eat, but they can also sell so they can trade for other goods that they need. Now, this is nice. You can do this every day. But every once in a while, it's nice to catch a fish like this. This is a bluefin tuna, and you can see they're much bigger than the other fish I just showed you. This type of fish in Japan could easily bring in $8,000, $10,000, $12,000 per fish. Okay, there's a very big difference between catching just for the day and making a sizable impact in your life. Okay, so what's the purpose of this webinar? The reason why I show you the fish, I apologize. The reason why I show you the fish is just to liken this to what we're going to talk about in terms of your trading. Okay? The purpose of this webinar is to show you the kind of the pitfalls and tremendous profit opportunities that you can find in volatile markets. The hallmark of a volatile market is that the market moves a lot. And hopefully you understand when you trade options, volatile markets that move quickly are a godsend, and that's what generates your revenue. I want to introduce you to the Big Fish trading system. It's a way to leverage the way you look at the markets into massive gains so that you can catch these bigger moves in the markets with relatively little risk. All right. What I mean by that is an example. Here is a move in Tesla. All right. And it's sitting here in consolidation. When we broke below this previous low here, and we started to break down. Okay, 360 was a support level we were watching. This was a This was a $46 move. It went from 360 all the way down to about 310, and we caught that $46 move. It occurred just in the span of about 2.5 days to 3 days if you held a little longer. And the profit per contract of a move like this is $3,220. It's not difficult to imagine that you could be probably trading more contracts than this. But that one move per contract can lead to profits over $3,000. Here's Priceline. Priceline is in consolidation. You have a head and shoulders type pattern. You don't see it on the daily, but it's clearly obvious on the hourly. There's a left shoulder here, head, right shoulder here, and here's the neckline. Once that neckline is broken, momentum starts to fall, and it comes down. It breaks at 1880, and it comes down all the way to 1780. So it's roughly a $100 move, $104 specifically, and that's $7,280 in profits per contract. Priceline, and this is a little bit of an older slide, it's booking holdings now, but it still makes moves like this every day. Actually, Priceline is very close to this current price right now. Right? So now that you kind of get a little taste of what I'm talking about, what do I mean by big fish? All right? A big fish is a huge winning trade that can make a big impact on your trading account. We're talking about a trade that you put on that will return 100% or more. And you do this by the use of using weekly options. All right? The nice thing about a big fish trade is that you're paid quickly. You know, to get 100% return on an investment is not an impossible task, given enough time. You know, you might hold a position for 2 years if you're trading stocks, and you can easily double that, and that's pretty good. But the goal of a big fish trade is to take your normal swing trading time frame, but use it. Look for a trade that has massive ability to move. Okay. Again, you want to take these big gains with relatively little risk to your account, and you do that primarily through multiple time frames. You risk small by trading on small accounts, but you allow the stock or position to move based on an opportunity you see on a bigger time frame. All right? These types of trades can quickly grow your trading account. All right? I'm talking about gains of these 100% gains can really supercharge the growth in your account. So this is a quick example of how big fish trades can affect your trading. If you're taking trades and you're normally making 1% growth in your trading account, all right, every trade you take, you're not trading the whole thing, but every little trade, it changes the value of your account by 1%. After 20 trades, the growth in the account has increased by about 22%. All right, through compounding and everything. Now, if you take that same technique, but every fourth trade that you take, you actually take a big fish trade, and instead of making 1%, you make 4%, you actually cause your account to jump every single time you have a big fish trade. And after 20 trades, with these big fish trades interspersed every fourth trade, your account grows to 41.25%. So what you're doing is you're accelerating the growth in your account by keeping your eyes open for these big fish opportunities. All right? So I kind of alluded to it earlier, but the question is, where do you find big fish trades? All right? It's kind of easy to understand, but big fish trades are found in big fish stocks. Okay? Big fish stocks are are large dollar-priced stocks with large average true range. I'm talking about stocks like Apple, Amazon, Alphabet, that's the old Google, GOOGL. I showed you the old Priceline, which is now Booking Holdings. These are positions, and even the S&P 500 can be a big fish stock. Okay? And the fact is they can move a large dollar amount every single day. And you catch these directional moves with weekly options. Stocks with highly liquid options and big implied volatility can be like Netflix, Amazon, GOOGL, Alphabet, Tesla, Apple, and Booking Holdings, the old Priceline. Right? So now you know where to be looking. How do you catch potentially big moves? Right? Remember, the concept that you have to remember, how we can make so much money, is that option profits are purely dictated by the dollar size price of the move. Okay? An example being, if you have an $1,100 stock and it moves $33, okay, $1,100 stock, it moves $33. That $33 move times a delta 70 in the money option is $2,300 a contract. All right? If you have a $110 stock and it moves 3%, and that move is $3.30. Same math. $3.30 times delta 70, you only make $230 a contract. You see that? Which one would you rather trade? The $230 contract or the $2,310 contract? I would much rather trade the $2,300 contract. Okay? Because you're catching the same percentage move, but it moves a whole lot more. Okay? And a big fish stock can easily move 3 to 5% in 2 days. 2 or 3 or 4 days. Right? Here's an example in Apple. This is a $20 move in Apple. We broke support right in this area. And this is about a $20 move. Okay? And then you can kind of catch that. A $20 move is $1,400 contract in 3 days. Okay? So how do you conduct the actual trade? Delta 70 is the option strike price that is in the money. You know, if it's at the money, like if the price of the stock is $1,100, and you're trading the $1,100 strike price, call strike price, or put strike price, that's delta 50. Now, if it goes in the money, it's delta 55, delta 60, delta 65, etc. Okay? All right, so how do you find these big fish moves? I'm sorry. You use multiple time frames. Again, I've talked about this before. You can use small time frames that lead to potentially big time frames. Okay? These big fish moves occur. I usually look for them on the daily chart, and these daily charts allow me to trade swing trades that last 2 to 4 days. Right? But the key is, even though I'm trading on the daily chart, I'm looking at the small time frame chart for an entry trade. Okay? It's almost like if I expect on the daily chart the market to fall, and I see the opportunity, hey, Amazon is setting up, it could move down 20 points. Well, I'll be looking at a 3-minute or 5-minute time frame of Amazon throughout the day, and if I see a trade set up that allows me to get into a bearish position, I'll take that trade. Now, usually you can take that trade and allow it to move a little bit and take your profits, right? That's a small day trade I might do on Amazon. But the key is now, once I have a position and it starts moving my way, I look around and going, hey, you know what? There's an opportunity here. The daily chart, I'm predicting it's going to fall. So what I'm going to do is use this small time frame as my entry. I'm going to manage a position and give it some room to run. This is what we mean by, have you ever heard the term, let your winners run? If you're a day trader, let your winners run might be, I'm going to get into a trade. It's normally 20, 30 minutes in duration. Once I get to the point where I normally take my profits, I adjust my stop loss and I leave it alone. Because the bigger time frame says, hey, this has got a chance to keep going, to keep running. And it may start out as bearish in the small time frame. If it moves far enough, the hourly time frame becomes bearish. And if the hourly time frame keeps moving down, the price action, then the daily chart will be an opportunity. So don't worry, I'm going to show you an example of this and break it down each step for you. Right? So how do you manage that position? Okay? The hardest thing to do on the big fish trade is actually letting your winners run. All right? Because now you've got a position with a profit. You really want to take it because you're worried the market's going to take it back. Excuse me. But you want to give your big fish moves some time. You have to be patient and let it move. Okay? You have to pay attention and focus in on the daily charts, okay, and trail your stop losses to lock in profits as your stock moves. And don't strangle your trade. Give your position some distance so that you can bounce around a little bit, but pay attention to the direction and momentum on the daily chart. Okay? Now, once you get to the point on the daily chart where you're going to hit your target, you want to have an exit strategy based on that daily chart. The bigger time frame, again, allows your position to expand and catch that bigger move. And one strategy I use to help people handle the mental side of this is we have various targets as it's moving down the daily chart. So we can take profits along the way. Okay? If we're thinking the chart, based on the daily chart, it may move up $100 along the way. Maybe every $20 we'll take a little bit of profit off if we're using multiple contracts. That way, you know for sure it's going to be a winning trade. You're taking profits and you're letting a certain portion of your trade continue. All right? It's much easier to let your winners run when you actually have book profits in your pocket, because you're never going to get 100% of that maximum profit, but you'll have an easier trade. All right, so let me actually run you through an example. This is a little bit older because this was when Priceline, Booking Holdings was Priceline, but it's a very, very good example of how you execute a big fish trade. Okay, so Priceline was at the time around $1,315, and all we did was catch this pullback of about $55 back to a moving average. I know you guys use an 8-period moving average once in a while, and we play that pullback. Okay? See, a couple quick questions here. How far out do you go in terms of expiration dates? That's a good question because you have to worry about theta. Usually about a week or two. It depends on how quickly you expect the trade to fulfill. And usually it's a swing trade. Usually it's 2 or 3 days, so it's not a problem. Okay. Also, the fact that you're buying an in-the-money option kind of negates some of that theta decay. All right. All right, so we're playing price line, a pullback to the 8 EMA. All right, and the setup for this trade is price line had been falling here for a number of days. We actually got on a small time frame a triple bottom, inverted head and shoulders, and then we noticed that it started to move higher. Every single day was a higher high, higher low, so a nice uptrend. Now, an uptrend usually lasts 3 days, 5 days, 7 days. Okay, after that 3-day support, which is a reversal pattern, we start to have a bullish trend. We have bullish momentum, and that's fine. That's the move. Now, the thing is, we don't normally have, a number of this many days in a row without some sort of pullback. And the one thing that you'll actually notice is that the more it accelerates to the upside, the further away it pulls from the 8 EMA. The distance becomes bigger. All right, it's almost like it's running past and pulling away from a relatively good judge of fair value, which is the 8-period exponential moving average. Okay, so what we're looking for is as it's moving higher, we start to also watch what we call significantly overvalued levels. That's why these are red. This is our value charts system. So it's almost like you're pulling the rubber band too far. The rubber band is always attached to the 8-period EMA. If it's really close, there's not much pullback. But the further you get away, the more extended you get, the more likelihood it's going to snap back towards the moving average. So we start looking in these daily bars for the opportunity for a daily pullback trade. Does that make sense? So we're looking at it in the daily chart for a pullback towards the 8 EMA. Now, it may be just a little bit of a pullback, but in this case, I'm looking for a pullback all the way to the 8 EMA. So in these days where the red arrow is, I'm looking for a reversal pattern that is bearish. Okay, I'm looking to get into a bearish trade that may set me up for a pullback. Now, the nice thing is I trade price line intraday, and these highs came in, and this is the high of the day right here, right? High of the day, and right there, that's a double top bearish divergence. And then we come up here, double top, another topping pattern. You see how momentum is kind of sliding down. And that's at the high of the day. That's at the midpoint of the day. So we've had a nice run up in the morning. So I'm looking for a pullback in the afternoon. I have this descending momentum. I've got these lower highs. So as we're hitting, as this forms this trend line to the downside, this is the first place I actually buy some puts. Now, at the time, I was trading 10 puts at a time. And it pulls back. And then I'm like, okay, I'm going to sell half my position. Because I'm looking just for this to pull back to that support level. So a little bit. So I buy 10 puts. I sold 5 puts. And then comes up again. Now, by this time, it's like 1, 2, 3, 4. 4 times we've hit this descending trend line. I'm thinking this is going to form a wedge, and this may actually break down. And I look at my daily chart, and I remember, I'm like, wait a second, I'm supposed to be looking for a bearish trade. So what I'm planning to do, I've already put some money in my pocket because I bought 10 contracts here on the very first purchase, and I sold some at number 2, so I already made some money. So when I buy here at number 3 and at number 4, I'm just accumulating contracts now. And I have 20 contracts by the time I hit this area, all right, because we're coming to the apex of the wedge, and I notice the momentum is really starting to fall. I'm still looking for that pullback off the high of the day. This is just the topping pattern on a 1 minute time frame, and then all of a sudden we break lower. This break makes it very, because I have 20 contracts, we break lower about $5, okay? And when we break like that, I actually have now a profitable position on 20 contracts. That's about a 5-point move on 20 contracts, and now I have a position I can hold, okay? So that pattern that I just showed you is back here. This is how it unfolded, all right? I have that position. It breaks lower, just like I showed you, and for the rest of the afternoon, it falls. Now, I have a break-even stop loss. So the next morning, this is why it's hard. It jumps up, but it doesn't get to that area that I purchased at. So I'm just holding the position because I know on that daily chart, I'm trying to play a pullback to the 8 EMA. So after the initial jump the next day, we continue to fall the entire rest of the day. This is where I take more profits. So I have 20 contracts. What I did is I sell 10 of those contracts just before the close because it looks like it's going to close on the low of the day. So I put those in my pockets and I have 10 more contracts remaining because it still hasn't quite hit my target. The next morning, we pop up again with the market, we fill the gap, and we continue to fall. Just before noon, it hits the 8 EMA, okay, from the daily chart. Now, I'm showing you on a small time frame chart, but it goes all the way from 1315 all the way to 1260. And you can see that let's see, right here, because it comes down and touches the 8 EMA. That's my target. That's the pullback I play. Okay? So, get to that slide. So that's where I sell the remaining 10. The nice thing about this trade is, again, that's where I sell right there. I hold basically 20 contracts, 10 of them to this point, and the remaining 10 to this point. This kind of move with 20 contracts netted me $63,000 in just over 2 days. Okay? And that's just because I recognized that that was a topping pattern at the at the very high of the day, and I'm looking for an opportunity for a bearish trade on a small time frame that I can hold as we are falling. Now you may say, Dave, I don't have enough money to buy 20 contracts in booking holdings. Well, the nice thing is this particular trade, even if you just did one contract, it would still be well over $3,100 per contract. Okay, so if you hold 1 or 2 contracts, it can make a very big trade also. Okay, again, that move, that's all we played, is that rubber band pullback to the 8 EMA. That is $63,350 in 2 days. Okay, so that's an example of a big fish trade, and they happen all the time. And I would say don't hesitate because profits in this market volatility are coming. I mean, let me just go ahead and actually bring up a chart. Okay, do you see how we have the potential to move? Here, a break in Apple resulted in a move down. This is the example I showed you. And then we bounce a little bit, and then we actually move further down. Now, this is a trending trade. It's kind of hard to catch. But here, when the Fed changed its wording in terms of how the market is now, how the Fed is going to be supportive for the economic expansion. This is Apple. Here's the same bounce in SPX. All right, this is a reversal doji. Okay, we're moderately undervalued. We snap back up the next day. Even if you catch it right here at 2,800. 1, 2, 3, 4 days later, we've moved 100 points. Okay? Here's more consolidation. Here's another jump. This is what we call a bull flag. Okay? Well, if you traded it once we broke that high at 29.09, we've already moved up about $45. And that's an easy target because that's the previous all-time high. Okay? That's the kind, and that was that was 1 day. No, actually, I'm sorry. No, that was 2.5 days. Yeah, because I don't remember a $45 move. Okay, that's just the S&P 500. Amazon did something very similar. Here, when we turned around, you can even play a conservative break above this high because there's the reversal pattern. Bounce off the 200-day simple moving average in Amazon. Okay, here's a break, and look at this. We go from 1765 up to 1895. This is a $130 move in Amazon. $130 in 2.5 days. Okay? The times a delta 70. Hold on. I got to do the math. Delta 70 option, that's $9,000 a contract. Okay, that's a big fish move. This happens in volatile markets. Here you have a descending wedge. It breaks the 1805 level, or even if you say, okay, if it breaks 1800, I'm going to go short. And you can make a play just to the 200-day simple moving average. This is about a 50-point move. And then if you hold on for dear life, this is probably another $70. Okay, I personally like big fish trades to the downside. They just move very, very fast. I'm using in the money options. Right? So here's an example. This is kind of an extreme example because this is a trader I had under mentorship, and she has a propensity to take larger size than I think she should. This is Dr. Teresa. She's an OBGYN from upstate New York. And she was trading Priceline at the same time I was. She actually, I put this chart up here because this is the trade she actually took. And actually continued lower to these support levels right here. But in my example, this is the only trade Dr. Teresa took. All right, in Priceline. Now, I'm going to show you this email she sends me because she actually sends it to me. She actually gives me a bunch of comments during a training webinar she's in. But she's so excited that she actually has to tell me while we are training. And I said, look, Dr. Teresa, I'm going back and forth there. I said, put it in an email, send it to me, and then we'll talk after the webinar. And so Dr. Teresa sends me an email right here. He said, I closed my big fish Priceline trade today. I made $182,000 in 3 days. Okay, and that was interspersed with a number of accounts. She traded Priceline and SPX, all right, and she is a little confused, but the net result, because she was trading in and out a little bit, she was trading a big move not only in Priceline but SPX. She pulled out over $300,000 in 1 week. Okay, this was you're like, what are you talking about, Dr. Teresa? She had probably 30 or 40 contracts, but what she traded was this downside move in Priceline, and that was $5,500 a contract. All right, but I fussed at her a little bit because of the size of the trades that she was taking. 323,000. She was trading close to 45, 50 contracts, and that's a little bit much for that. But she basically was trading close to $200,000 of buying power, and that's how she made $323,000. So it's still close to about 125% on that move right there. The thing about it is when we reflected on it in our training session, our one-on-one session, if she held it a little bit more, she would have made twice that much. Yeah, she got out a little bit early, and all of a sudden it broke lower in 2 days later. So if she held 2 more days, she would have made well over $650,000 on that trade. Yeah, that year she went to the Holy Land. That was probably October, and she took her family to the Holy Land and very nice Christmas spree in New York City that year. So that's a nice little story I like to share with you. So the question is, are you ready to kind of move up the ladder of profitability? All right, I know a lot of you are asking very specific details about the Big Fish strategy, and I actually have the Big Fish Trading Workshop available to you now. Now, this is a workshop. It's about 2.5 hours long, so it's available now. If you pick it up, you can be trading Big Fish trades as soon as you finish watching the workshop. Some people are gung-ho and they'll watch it the night that they get it. And it's a great opportunity, especially if you have some option trading background. It's easy to pick up. You just have to learn how the different time frames work together and what the steps are in the process. But in the Big Fish Trading Workshop, I'm going to show you how to find stocks and ETFs that are considered big fish stocks. I'm going to identify and measure potential big fish moves. This is where I teach you how to move between the time frames, right? And then that's the big time frame. How to catch and see a big fish opportunity, and then how to catch a big fish move at the beginning. So this is a small time frame, right? And then I'm going to teach you techniques to getting into a strong, profitable position with little or no risk. How do you manage your position when you're just starting to make money on the small time frame so that you can position yourself to make a whole lot of money but limit your risk? The hardest thing, and the concept I want you to think about is this. If you are trading Amazon on the daily chart, and you're saying, okay, Amazon's going to break above this 1895 level and jump up to 1950. That's actually, it actually did. Now we're here, we're about to hit resistance around 1950. I think it's a reasonable target to come up to 1964. You're at 1918, right? If you enter this trade as we break the high at 1935 tomorrow, and you hope that it goes up goes up $30, where is your stop loss? Well, my stop loss should be the low of this bar at 1907. So you're going to buy options when it's at 1935, and you're going to put your stop loss when the price of Amazon is 1906. That is a $26 stop loss. I don't know anybody that wants to hold Amazon through a $26 stop loss. You're going to lose your shirt. So you have to use small time frames to help you with that. All right? So that as you put on trades in the small time frame, your risk is much smaller. Your stop losses are much smaller, primarily because you're trading on a smaller time frame. Okay? But I will teach you all of that in the workshop. I'm going to teach you also techniques to make money along the way and how to take profits as you go so you can better hold on to a position as it moves that big distance and you're just sitting and waiting and hoping, and it allows you to maximize your gains. It's almost like everybody tells you let your winners run, but it's hard to do that. And you're sitting there and you're staring at your profit and you're like, wow, that's pretty big because you've never seen a gain that big in your life. You're like, okay, let me just settle for this. No, I teach you a technique on how to take profits along the way so you always have something in there that you can let it run. All right? This is the same strategy we use to trade Priceline. The example I just showed you made over $63,000 in 2 days. right? So this is what you get in the offer. You get the Big Fish Trading Workshop. Now, normally we ask $497 in our Basecamp Trading store right now. I'm also going to throw in a Platinum membership because whenever Big Fish trade opportunities come up, we actually send them out to our members. We're either trading in the trading room and we discuss the setups live, or we're talking about them in the end of day videos. Okay, that we've caught a lot of this up move since that pronouncement by the Fed about 2 weeks ago, and we've caught several big fish trades to the upside and have done quite well. That S&P 500 trade we caught as it was moving up almost 100 points. Okay, that's why I said this is a great opportunity for that. And we publish those in our end of day and pre-market videos for our Platinum membership. So you can experience that too and be on the receiving end of that information. We're going to throw in 1 month of Platinum membership for you. And normally that's $97 a month. We're going to give that trial to you. Now, the total value of this program is $594. But because you're Steve's traders and you guys are great for being here tonight, I'm going to only ask, I'm going to actually give you a very good price. It's not going to be $594. All right? Remember, this is the same strategy that Dr. Teresa used to generate over $323,000 in about a week. So, what can I ask for that kind of profit potential? We're going to ask only $47. Right? This is an opportunity, I think, in the markets to catch some pretty big moves. And just to give you a hint, as we're breaking this new all-time high, I am actually expecting the S&P to continue higher up to 3,000 and potentially a 127 extension at 3,013. We closed at 29.54. So you have about a $50 to $60 run still in the S&P 500. And that's the position I would suggest you be looking. I mean, that one trade could pay for 40. I mean, your commission on the trade will probably be more than $47. It's that good of a deal, right? And what you need to do in order to take advantage of that deal that I'm giving Steve's traders is go to www.bcgnow.com/fish. Thank you, Steve. Oh, he's got the link there. I would definitely just use his link right there. Okay? Steve's posted in the chat. So if you need any help, you can always contact us at support@basecamptrading.com. Now here's a kind of a good example. If you're still worried about $47, just to have, I mean, think about it. You can spend $47 on a trading technique that you can implement when you see a big opportunity on the daily chart. I'm going to give you 30 days of video, access to our trading room where I talk about swing trades and big fish trades every day in the end of day videos, but only asking $47. All right? Let's just say you give it a shot and you see an opportunity and you're looking to catch a $10 move in a stock. That's all. My goodness, Amazon can move $10 in an hour or less. So let's just say all you want to do is catch one trade and the stock moves $10, which is very, very easy. If you're using an in-the-money Delta 70 option, say like a call, you just made $700 for that $10 move. If you do that every so often, so you do one of those $700 trades a month, just one, that's potentially $8,400 per year. Okay? Just for knowing what to do and when to do it and be on the lookout for that opportunity. Right? It's almost like you have a special tool that you can bring out, and the technique can be applied for particular opportunities, and it's only $47. So go ahead and jump on that opportunity. I really, really appreciate the opportunity to speak with you tonight. And I just would like to say there's a lot of opportunities in this market. I really think we're going to hit this upside 127 extension in the S&P 500. Okay, I think we're going to continue with this momentum. I know everybody's kind of worried about, you know, the kind of the little upstir here with Iran. And just remember, the market climbs a wall of worry. You know, while everybody's sitting there worrying, the market's thinking about the Fed and the potential interest rate cut. The reason why I point this out in the S&P, the NASDAQ is also poised to move higher. Okay, it hasn't broken that previous year high and keep going higher. And the Russell also can have some distance to run, right? And if these indices are going up, these individual stocks are going up too. So take advantage of it. It's not very hard to do. You can pick up the program and be watching it over the weekend and ready to go on Monday morning. So go to Stephen's link there. It is in the chat box, www.stephenbigelow.com/bigfish. All right, guys? Any last minute questions? On average, how many do we do a month? Big fish trades are more directly linked to the volatility of the market more than anything. So whereas in the past month, we've probably had 2 or 3 opportunities a week. There were some months when the market was steadily moving higher and lower. Let's see here. We were, when the markets were moving like this, there's fewer big fish opportunities. Okay? But kind of like what I said, it really started up back here when the market started to break down in early May. This is when big fish opportunities occur. This fall right here was really good. This drop, okay? And then when the Fed changes stance, bam. I mean, that's a really strong move. This is a consolidation pattern. They had the Fed meeting, and we're breaking to the upside again. Okay? That's the S&P. That's why it's behaving like this. So it's really more directly linked to the type of market we're in, and when markets get volatile, big fish are out there. Will the training teach you how to find these trades on your own? Absolutely, Debbie. Yeah, a good thing about the Platinum membership, if you don't like it after the first month, then you can cancel it. But the technique is there. There's only a few big fish stocks. That's why you're not like, you don't necessarily have a screener that you're worried about. And like, oh, I got to go through thousands and thousands of stocks. No. You actually have a nice group of stocks with high dollar value. You have big average true range, and you just watch those. Okay? You usually don't have you can't do this on like Beyond Meat. You know, that's not what we're talking about because the price is still too low. What you're looking for is for Amazon to move 100 points. For the S&P 500, SPX, that's almost a $3,000 per share security. Well, you're just looking for it to move 50 points. And it can easily do that in 2 or 3 days. Remember, it's the opportunity plus the leverage of options. That's the beauty of this technique. Okay? It's, you don't go out there hunt for fish for bluefin tuna, with the same kind of tools that you use to fish for bass fishing in a river. It's different. Okay, so you're going where the opportunity is, using the right technique, using the right strategy, and when the opportunity comes, you can get it. The workshop is available forever. So Once you pick it up at $47, I can't believe that price, $47, it's like 90% discount. It's forever yours. You're welcome. You're welcome. Yeah, in my trading room, I do have people saying, do we see any big fish trades? But our accomplished big fish traders know when the markets get crazy, that's when big fish opportunities are. Big fish like crazy moving markets. And when they move a whole lot. A lot of times, most traders naturally know there's opportunity when markets are crazy. But the problem is their technique. And just like I showed you earlier, if you're trading on a daily chart and saying, wow, I think Amazon can move 50 points. Excuse me. On the daily chart, you say Amazon can move 50 points. I'm going to take that trade based on the daily chart. Well, your stop loss is going to be huge. It's going to be huge. Don't use that technique because you're going to get your head handed to you. The best technique is to look for the opportunity on the daily chart, use the big fish trading strategy, and then trade on a smaller time frame and get your foot in the door. Get into a position to buy a call or a put based on a small time frame. And once you get that, let that winner run because the opportunity's there. You've already identified it on the daily time frame, the big time frame. Now you've got your foot in the door because of the small time frame, and you're in position now. Now the little tiny trades don't always work out, but it's okay. You're trying to fish for something bigger, and everything is explained in the workshop. The monthly renewal for the Platinum membership is actually $97. What I'm doing is I'm kind of throwing in a free trial. So $47 basically is the price of the workshop. You get a 30-day free trial to the membership, and if you decide to stay in, it's $97 a month. Can the technique be applied to 3x ETFs? You could, definitely. You just need to be able to understand and see the opportunities on a daily time frame and still trade it on a smaller time frame. But the techniques would be good. Your leverage comes from the 3x leverage of the ETF and not by options. Now, your returns won't be as big, but the technique can be still applied effectively. Any other questions? Jim, if you also want to learn more about my 11-hour options strategy, sure, send an email to support@basecamptrading.com and let us know how we can help you. You take care of that. The 11-hour option trades are part of Platinum membership. That's another type of trade we do in our trading room. Okay? All right. Well, I am at my time limit. I appreciate the opportunity, guys. And Stephen, Becky, thank you very much for hosting me. I hope I delivered some good information, give you guys some feedback on where I think the markets are going. And it's pretty cool when the volatility is working in our favor. So this is where most people are afraid. When the markets go haywire, we actually look at it as a very big opportunity. Okay? All right, everyone. Thank you very much.